Hello, 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 everyone. Happy Intervention Friday. How is everyone doing? Hopefully, Bob can jump on in a couple minutes. I asked him if he could jump on. We got the Bank of Japan. Pretty big intervention this time. Pretty big, reversing the dollar. Then we got the rip your face off move in equities. Also, nice little bounce back in the notes. The steepening of a bunch of the yield curve. We had a couple Fed speaks today, so it was a very busy day on options expiration Friday. Was not expecting the Bank of Japan intervention today. And stuff really got stressed. It's almost like they was preventing a breakdown in stuff. But that's just my take on it. Hey, George, how about them June lows? Good evening, Anissa. Happy Friday, Gary. Good afternoon, Patrick. Rally at the end of the year and then the flush. I think we might get a flush before the end of the year. I think this was I'm still worried about something now really breaking. This seemed really forced to me to do this on big OpEx Friday when the market was breaking down. You also have the Fed going into blackout period now. So no more Fed speaky until the rate decision, which is pretty much baked in at 75. So good afternoon, Sashi. Good afternoon, AP's World. Head fake this morning for stocks. Well, I'd say it was more that once the dollar got absolutely short-term decimated, yeah, but it was fascinating. It was fascinating. Also, VIX up. VIX up. You want to know why the VIX was a little? I mean, overall on the day down, but this up from the lows. That was based off insane implied volatility call buying. The calls were actually forcing this up. The calls were forcing this up. Remember, for option pricing, if you're going to bake in a higher price and you're selling a bunch of it, the only thing you can control is implied volatility. So if I'm going to charge more for an option, what's the only variable that can move is implied volatility. Everything else is fixed by the market. So, all right. Let's see here again. Turned into a massive trend day. Let's get Bob on in a second. Let's just hear what got some questions for the Bob. Let's just add Bob right in now.
Don't make everybody wait.
What's that, Bob?
Don't make everybody wait.
Oh, where's your wall?
I already took my wall down for the weekend.
The wall doesn't stay up all weekend?
No, I don't leave it up. It's stupid.
I mean, you don't like hang things on the wall for the weekend, put some art up there?
I don't know if you can see it back there. I've got like a Bears thing. Can you see that Bears thing on the wall?
Barely.
Yeah,
Nope.
it's from Soldier Field. A friend of ours worked there and now lives down here and gave it to me on my birthday. It's like a wall hanging, an old wooden wall hanging. I thought about trying to figure out a way to hang that from my wall, but it would probably take the whole wall down.
Well, you'd probably have to anchor it somehow, but oh, that's too much thought process for me.
It's a lot now.
So, I just wanted to get your thoughts. We had the Timoros article right out before the open. Then we had the Bank of Japan intervention. You still on here, Bob?
I'm on here.
Oh, it looked like you froze. So and all on OpEx Friday. Made pretty decent OpEx today, but then and we had a couple Fed speak. So what's and right now it's a blackout period. What's your take on all this?
Um, it's funny to me because so let's start with the Wall Street Journal article. Nothing in that article surprised me. Nothing was different. as I've said multiple times in this live stream and on TV appearances everywhere, um, this particular Fed, the Jerome Powell Fed, has always said what they're going to do before they do it. So it seemed obvious to me that at some point the Fed was going to say we might slow down soon. And that Timur's article says that there's going to be a 75 basis point rate hike. If I read it right, 75 basis point rate hike is pretty much baked in for
Yeah.
November, right?
Mm-hmm.
So what's the first thing that happened when I looked at the CME Fed watch tool? The percentage dropped by 6%. Why? Because the article said it's going to happen? I didn't understand that at all. So that to me already told you that the market was overreacting to what was in the article. Then it said that there's going to be a discussion about whether to do another 75 or 50 in December, which has been a discussion in my mind. If you remember, I said to you guys that I thought the Fed would do 125 basis points more this year, and I thought it would be 75, 50. That's how it would go. That article didn't really disagree with my
No.
view. I mean, again, obviously the market didn't hold my view, right? I held my view. So it didn't surprise me at all. And the fact that we would rally this much, okay. I mean, it was good volume. It's no problem. I guess more of the market didn't believe the Fed was going to ever slow down, that it would be 75 basis points going forward forever. I feel like I'm frozen.
You're not frozen.
I'm definitely frozen.
You're not frozen.
I don't know if you can still hear me.
You're not
I'm going
frozen.
to keep talking. The chat is still working for me. So if you guys can still hear me talk, somebody put it in the chat that you can still hear me. I know my image is frozen. I'll wait.
Yeah,
All right.
it's can you hear me, Bob?
Yeah, I'm getting out.
Hello?
All right. How much of that did you hear?
We heard everything. You were fine.
Okay. So the article didn't say anything different than from what I've been saying. So it didn't surprise me. Also, I said the fourth quarter is going to be positive. So literally nothing that happened today was at all surprising to me from an equity perspective. What surprised me the most was how much the curve steepened. The curve steepened, if you're looking at the 2s10s, by 20 basis points this week, 10 of it today. That surprised me. I'll be honest about that. I thought that was a very dramatic effect. So if you think about what that means, that's pointing to the next set of Fed potential rate hikes, if you think about it. Because if the curve steepens, that means further out the curve, they're demanding more yield to compensate for inflation. That means inflation will be here. That means the Fed's going to have to do something about inflation in the future. That's what that means. Spell it out that way, Mike. I know you saw what I tagged you in as a quote tweet. When you spell it out that way, it goes to Mike's research, and obviously Cameron Dawson did the same research that says that the curve will unwind and it's not the bottom yet, because as the curve unwinds, there it is, as the curve unwinds, equities suffer because the Fed gets more aggressive in the future, maybe not right now. So there'll be more rate hikes. There just might be a pause while the Fed waits, kind of lets markets adjust to what they've already done. And I've never disputed that there needs to be a pause or should be a pause or would be a pause, just that there wasn't going to be a pivot,
Bob,
which is obviously going from tight monetary policy to easy monetary policy. Yeah.
you know how many people told me today was a pivot?
Yeah.
Yeah,
Now I can't hear you guys again, but apparently
Can
you
you-
could hear me. So, Mike, if you're saying something to me that you want me to answer, text me,
can
because
you
I'm not hearing it.
hold on? Let's see. Testing 1, 2, 3. Testing. You there?
I switched to backup Wi-Fi. Okay. Well, I heard you say
Hold
Bob.
on. I
You were
think
gonna
the
ask me
whole
something.
live stream's frozen. Hold on. I'm going to just relaunch the live stream.
Okay.
So
I'll
give me
come
like
back on.
30 seconds.